So very good morning everyone. So in the previous class, I mean not yesterday, I'm talking about a day before that, illustration number 1 we have discussed, where we have completed various kinds of ratios and their analysis. There we have seen about gross profit ratio, operating expenses to sales, operating profit ratio, capital turnover, stock turnover, net profit to net worth means return on equity, and next one receivables collection period. Those are all the various things that we have covered in the last class before that. So in the today's class, let us do another 4 problems in this particular area. It takes time, but good 6 illustrations are given in the study material. Let us do all the 6 types. Clear? As I told you already, if you do problem number 1 properly, any question given in exam will be of the same model. They will give information, we have to calculate ratios, comment whether it is performing well or not. Listening? So that's the idea. Now, take question number, the illustration number 2, page number 3.48, study material. Illustration 2, page number 3.48. Hey, listen. So illustration 2, page number 3.48. This is another question that came for 8 marks in the recent exams. Let's see. Read the question properly first. Okay. See there. Following is the abridged balance sheet of Alpha Limited. Abridged balance sheet means balance sheet in a simplified format. That's why they are not following schedule 3. Normal balance sheet they have given T-shaped balance sheet. Share capital, P&L account, current liabilities. Land and buildings are at 80,000, plant and machinery 50,000, depreciation 15,000. Okay, net plant and machinery is 35,000. Total assets, which assets? Fixed assets 1,15,000, stock 21,000, receivables 20,000, bank balance 1,000. Total current assets is 42. Fixed assets, current assets. How much is the total fixed assets and current assets? This is the total assets. This is the total liability. Liabilities are divided into 3 parts. What are the 3 parts? Share capital and profit and loss account. We popularly call this as net worth, also called as equity. Equity. Okay na? Next. Current liabilities is how much? 40,000. This is a current liability. So technically, working capital in the existing situation, 42,000 minus 40,000. How much is the current assets? 42,000. What is the current liability? 40,000. Understood? That means my current assets are 42. My current liabilities are 40. Means current assets are capable of paying current liabilities or not capable? Answer. Technically, company is in a difficult situation. Do you know why? After paying them, how much is only left out? 2,000 is left out for the company. Okay, that's how we can understand. And moreover, if you calculate the quick ratio, much more worst. Okay, see there. What is the quick ratio in this particular case? What is quick ratio? Liquid ratio. Formula? Current assets minus stock minus prepaid expenses divided by current liability. What is the current assets? What is the current assets? 42,000 minus what? Stock. Minus what? Stock. So how much it will be? 21,000. Has to pay how much? 40,000. Company is in good position or bad position? Actually worst position it is there. That means if a current liability person comes to me, creditor comes to me, make my payment, I will tell wait, let me sell the stock. Why he will wait till the stock is sold? Are you understanding or not? So quick ratio is good or bad in this particular case? Bad. And moreover, listen carefully, Why I am telling this is, whenever you see the balance sheet of a company, you should analyze all these important ratios. Even for that case, you go home. I will tell you one website where all the company's balance sheets are available. You do the ratios analysis properly, you can understand whether to invest or not to invest in that company. Clear or not? Okay. So the point is very clear. We made a basic analysis of the structural balance sheet of a company. Tell me, what is a land and building? What is a plant and machinery? 35,000 a worth is only 35,000. What is the total assets? Total fixed assets? How much is the total current assets? How much is the quick assets? What is the current liability? What is the profit in the P&L account which is created? This can I call as a reserves and surplus or not? Yes. So up to here everyone understood? Okay. Next. With the help of additional information furnished below. When I say additional information, those informations are not considered in that balance sheet. Okay. Additional information, you are required to prepare trading P&L account and balance sheet. Company went in for reorganization of capital structure with share capital remaining the same as follows. Share capital 50, other shareholders fund 15, 5% of debentures, 25% of current liabilities. Debentures were issued on 1st April. Which April? When I issue on 1st April, it will not be reflected on the balance sheet of this date. This balance sheet is prepared on which date? Everyone? On that balance sheet it is there or not there? Not there. Okay? See here now. So debentures were issued on 1st April, interest being paid annually on 31st of the March. Okay. Next. Land and building remain unchanged. They don't change. Additional plant and machinery has been bought and a further 5,000 depreciation was also written off. So additional depreciation is how much? 5,000. It is reflected in that balance sheet or not reflected? Not reflected. Now we have to reflect that. It's like a rectification of errors. You might have seen rectification of errors in accounts. Like that it look like. Total fixed assets then constituted 60% of the total fixed and current assets. Working capital ratio. What do you mean by working capital ratio? Current assets by current liabilities. Okay. So this is existing working capital ratio, changed working capital ratio. After company went for reorganization, this is a situation. Listening, quick ratio is how much? What do you mean by that? Ade, what do you mean by that? Liquid assets ratio means, what do you mean by that? Short-term solvency, we require cash more than the form of assets. Okay. So after reorganization of the company, what is existing quick ratio you said? 20 for 50%. Something you said. 0.52:1 existing quick ratio. Now it was company went into reorganization and the quick assets are revised to how much? 1:1. Receivables 4/5 of the quick assets to the sales ratio revealed a credit period of 2 months. There were no cash sales. Means all the sales are credit sales. That means if you know the debtor's value, that itself is a sale value. Return on net worth. Return on net worth. What do you mean return on net worth? Return on equity. How much? 10%. Gross profit was at the rate of how much of selling price? 15. How do you know the gross profit now? First we should calculate the debtors. Debtors will become credit sale. Total credit sales is the total sale. Total sales of 15% will be gross profit. Stock turnover was 8 times for the year. What do you mean stock turnover? Formula. Cost of goods sold divided by average stock. Are you understanding the point or not? That is collection period. I am not asking collection period. I am asking what? Stock turnover. Which one? Stock turnover. When I say times, it is in days or times? Tell the stock turnover ratio formula. COGS by average stock into 100. That will give you the times or not. That times he is asking. Into 100 also you need not to. Directly you can tell number of times. Listening? See here. Here he has already given the timing as 2 months. You need not do anything. Timing is how many months? 2 months. Debtors collection period. Cash to become cash. It has taken how many months time? 2 months time is the cycle time. Am I clear or not? So this is the balance sheet. Please don't see the answer. Analyze the question first properly. 8 marks will not come just like that. Please analyze the question properly first. Don't see the answers. Take 2 minutes time. Observe the balance sheet and P&L properly. Once after that, we will start doing the answers. Okay, na? Everyone, shall we continue? Okay. Now tell me, have you read the question? Company went for reorganization. Reorganization means changing its entire capital structures, etc. After the reorganization of capital structure, how the share capital is? How much percent? Answer. See the question. Company went in for reorganization of capital structure with the share capital remaining the same as follows. What is the share capital? 1 lakh. Existing share capital is 1 lakh. Even after reorganization, how much is the share capital? If 50% is equal to 1 lakh, 100% will be equal to 2 lakh. Such that can we calculate the other funds values or not? Yes, keep the heading in your notes. Illustration number 2. Illustration 2. Page number please. $3.48. Page number 3.48. Write down. Step 1. Calculation of capital structure after reorganization. Okay. First point number 1. After reorganization, which capital remain the same? Therefore, amount of share capital even after the reorganization will be same. Okay. First write down that. Since it is said that share capital after reorganization is same as before, since it is said that share capital after reorganization is same as before, rupees 1 lakh is the share capital even after the reorganization. Therefore, values of various items of liability post reorganization is as follows. First, everyone tell me, did you understand share capital adjustment? Tell me what he given a hint in the question. Share capital is same or different? Same. Company went for reorganization. One second. See the balance sheet once. What is the share capital? 1 lakh. Profit and loss account? Answer. Current liabilities? After reorganization means after change in the structure of the company, these numbers are same or different? Different except share capital. That's a hint he is telling. Clear? Shall we do that? Write down, sir. Below write down. Item of liability. Percentage. Amount in rupees. Like this, if you present the answer in exam, you will get full marks. Please present properly. First, the items of liability. Write down one by one. First, write down the items of liability. What is the first one? Write down. Share capital. Second one. Other shareholder funds. Technically, we can call it as reserves and surplus. Number 3. 5% debentures. Number 4. Current liabilities. Okay. Please tell me one by one the values. Before going into that, first my point is how much is the percentage value of the share capital? Next, other shareholders 15%. Next 10%. Next 25%. Below write down. This all will total to how much percent? 100. On the other side of the story also, draw 2 lines to show the total. Now you people should only tell. So tell me, 2 lakhs is okay. How you got that is important. Share capital is changing same as before. How much is same? How much is before? Brackets are write down given. Okay. If this is 1 lakh, 100% will become how much? 2 lakhs. Okay. Below 2 lakhs, just give a down arrow for understanding sake. %50 equals to 1 lakh. Like that we calculated. Okay. No point, don't assume that he knows how you answered. Every point put it on paper. Okay. So 2 lakhs and 1 lakh. Next, tell me the balance. If 2 lakhs 50 is 1 lakh, what is the 2 lakhs 15,000? Next, 2 lakhs 10%. 2 lakhs 25%. Total making it 2 lakhs. Understood the point clearly? Answer? Yes, now, first listen carefully to my point. Completed up to here, everyone? Now, on the side of the balance sheet, we got all the four numbers. What are the four sides of the balance sheet? Four parts of the liabilities on the balance sheet. First one, share capital. Other shareholder fund, reserves and surplus. Number 3, 5% debentures. Very good. Below you do one thing. Keep the heading. Recasted balance sheet. Recasted balance sheet. What we are going to do? We will prepare skeleton of the balance sheet. Whenever number comes, we will put there. Are you understanding or not? Write on the balance sheet pro forma properly. Vertical balance sheet or schedule 3 balance sheet? Normal T-shape balance sheet or schedule 3 balance sheet? T-shape balance sheet only. He is not expecting schedule 3 from us. Okay? Question like if he is given normal balance sheet T-shape, go with that. If question like he has given schedule 3 type, follow schedule 3 only. Okay. Right now? I think everyone know what will be there in the balance sheet. Right now. When it comes to the liability, write down. Write down the pro forma of the balance sheet properly. Okay. Sir, listen please, we are not doing any fast track sessions. Listening, every line we should write. If this is a crash batch of fast track session means I will first show the notes and I will ask you to just copy down. There should be some difference, na? Every line you should write in the class, you should experience each and every number. So first draw the pro forma properly. Liabilities amount, assets amount. Okay. First tell me 4 numbers we know now. 4 numbers we already know now. What are the 4 numbers? Write down those 4. Fill that. Share capital rupees 1 lakh. Next one. Second one. Other shareholders funds. I will call it as reserves and surplus. How much it is? 30,000. Third one. Value please. Last one. How much? Okay, 50,000. These are the only liabilities, correct? Write down there, total. Total write down here. How much it will be? 2 lakhs. Total 2 lakhs. First point number 1. Hello? First point number 1. Why we are preparing the skeleton of balance sheet? First point, I am not a fool. Unnecessarily to write some things in class. First point number 1. If you see the question clearly, if you observe the question clearly, total fixed assets constituted 60% of total fixed and current assets. Total of fixed assets and current assets is the total assets, correct? How much will be total assets? Equal to total liabilities. That's why we are drawing the balance sheet first. From that we can know the total of assets. In that 60% will be fixed asset. Like that hint will start. Did you understand the point where we are starting with? On revision, after revision is made, total fixed assets is constituting how much? 60% of total of fixed and current assets. Can you please tell me what do you mean by total of fixed and current assets? Total assets. Total assets is equal to total liabilities. What is the total liability? That's why we have done that. Okay. Write down. Total. Sir, today you are doing in the class. Therefore, first you are filling 2 lakhs, you know. After writing the notes, if you see, you should understand that point clearly. Did you understand what I said? Today you are doing in a sequence. First we calculated liability, then we are writing the total in that side. But when balance sheet is fully prepared, if a person see how you got 2 lakhs, a question will arise. Therefore, I have a option also for that. Hey. If plan A fails, we have plan B. Write down. So how much is the value? 2 lakhs. Total assets is equal to total liabilities. Okay. So now tell me, assets values we know na, we have to calculate. We know na, we know assets values. No, we don't know asset value. But one hint available now. What is the hint available? 2 lakhs is the value of the assets. In that 60% is the fixed assets. Are you understanding? Write down. Fixed assets. Below you write down. Not here in the balance sheet. First listen carefully. Step number 2. See the question once. Total fixed assets constituted 60% of the total fixed and current assets. Okay. Next, answer to my question now. Please listen. 60% is the total assets mean 40% will be the current assets. Using that, can we calculate the working capital ratio? Using that, can we calculate the balance amounts or not? And very, very important, land and building value is same, unchanged, changed, unchanged. Then what is changing? Plant and machinery is changing. What is changing? I will ask you one question. Additional plant and machinery has been bought. How much worth? We don't know. We have to calculate that. For that only we need fixed assets value. Everyone in the class, please follow properly. Up to here, I will ask you one question answer. Do you understand why total assets is 2 lakhs? Yes, everyone sitting in the class. Yes, why total asset became 2 lakh? Because total liability is 2 lakh. Balance sheet balancing will be done only if the assets are equal to liability. What is the total liability? 2 lakh. Because of 2 lakh, assets also will become 2 lakh. Assets are total assets are 2 lakh. Listening? In the 2 lakh, how much is the fixed assets portion? 60%. Balance will become current assets. Listening? In that fixed assets total, in the total of fixed assets, land and building remain unchanged. See the question and tell me, what is the land and building? 80,000. Answer? 80,000. Next, what is the plant and machinery value? Balance is the plant and machinery. Correct? Some amount, plant and machinery. Further 5,000 depreciation was also written off. We need to know how much additions you made to the plant and machinery. What we should know? Additions made to the plant and machinery. Right now. Calculation of fixed assets and current assets. Write down. It is given that fixed assets are 60% of total assets and balance will be current assets. So total assets two lakhs will be broken into two parts. First part will be will be 40. That 60% part will in turn account for how much? Write down the working clearly and show that. How much it will be rupees? Second side 2 lakhs minus 1 lakh 20. How much will be the current assets? Step 2 completed. Okay na? So fixed assets comes to 1 lakh 20. Current assets have come to 80 of the total assets of 2 lakhs. Shall we move on to the step number 3? Write down, sir. Step 3. Calculation of additions made to plant and machinery. Calculation of additions made to plant and machinery. Roughly first tell me the answer here. After that we will fairly note it down. First everyone concentrate. I don't want everyone sitting silent in the class. Answer, reply properly. What is the total assets value? In this, how much is the fixed assets? Which comes to 60%, sorry. 1 lakh 20,000. In this 1 lakh 20,000, how much is the land and building? How we are taking 80 directly? Question has given that land and building value is increased or reduced or remain unchanged. Therefore, how much is the plant and machinery? Answer. This is the balance sheet after reorganization or before reorganization. Therefore, 5,000 depreciation is provided already. After providing it, this is equal to how much? 40. That's a very important observation in this question. I repeat one more time for those who are not in this world. Listen carefully again. 1,20,000 is reorganization after or before? Answer. Additions after or before? After making addition. We don't know how much is added, but after addition, say this is the amount. Common sense. See the question and tell me what is the total of the balance sheet before reorganization? 1 lakh after reorganization. And additions are already made or not in that? Then what is your doubt here? Tell me. 1,20,000 fixed assets contained additions or don't contain addition? Very good. Okay, contained addition. And moreover, depreciation of 5,000 is already provided, yet to be provided. Already provided. We wanted to know how much additions are made. How much additions are made? Listening everyone? Okay, for that how to do is the question now. First point number 1. How much is the fixed assets total? 1,20,000. In that hint they have given in the question is 80,000 worth land and building value is remaining unchanged. And changing not changing very good, not changing. So directly you remove the land and building. What is the balance? What is the balance? This is after providing depreciation or before providing? After providing depreciation. Correct? Now see the question and tell me what is the land and building, plant and machinery before reorganization? Answer 35,000. Okay na? Tell me 1 second. What is the land and building value as per the balance sheet? Sorry, plant and machinery. Plant and machinery in the balance sheet before reorganization is how much? Answer, yeah. How much? In this 35,000, 5,000 additional depreciation is there or not there? Not listening. Come again. Come again. How much is the total of assets? How much is the total of assets? In this, how much is the fixed assets value? In this 1,20,000, land and building, can I reduce 80 directly? Why you can reduce? Even after reorganization, that 80,000 is changed or remain unchanged? How much is the fixed assets value? 40,000 is, when it is 40,000? After additions or before additions? Before depreciation of extra 5,000 or after? Up to here everyone had clarity kada? What is the fixed assets, net fixed assets value before reorganization? Answer. Fixed assets before reorganization is 35,000. Now answer. That 35,000 is having 5,000 additional depreciation or not having? That's what I am asking. That means in this 35,000, 5,000 additional depreciation is not there. Are you understanding or not? Reduce the additional depreciation now. How much it is? 5,000. How much is the balance? 30. 40 became 30 means 10,000 additions are there. 30,000 fixed assets has become 40,000 means how much addition is made? 10,000. Not understanding. Start again. No. Everyone has to understand that our policy is not majority. We are not doing Companies Act. See here. And take Companies Act, at least ordinary special resolutions will be there. Here that concept also will not be there. See the screen once again. How much is the total assets? 2 lakh. Very good. In this 2 lakh, how much is the fixed assets? 1,20,000. Very good. In this 1,20,000, how much is the land and building? 80,000. Very good. How much is the plant and machinery? 40,000. Very good. 40,000 plant and machinery is after or before? After. Now tell me, plant and machinery before is how much? 35,000. Before is how much? 35,000. 35 35,000. Before or after? Before. Now tell me, can I tell 5,000 is the addition? No, sir. Can I tell 5,000 is the addition? No, you cannot tell, because this 35,000 has 5,000 additional depreciation not included. In the 35 included or not included? Not included. Understood the point? You can do this in 2 ways. How to do, I will tell you. Tell me, in this 35,000 additional depreciation there or not there? Not there. In this 40 additional depreciation there or not there? Some people are mixed answers here. 40,000 is after additional depreciation or before? 35,000? How can you compare before depreciation with an after depreciation number? Bring them into a common platform. Okay. 35,000 after depreciation will become how much? Answer. That means 30,000 asset has become 40,000 asset. Means how much addition was made? 10,000. This is one way. Or you can do in another way. 35,000 is before or after? Before. 35,000 is after depreciation or before? Before. 35,000 is before additional depreciation or after? Before. 40,000 is? After. You bring also this into before. How much it will be? 45,000. Even in that case, how much increase is there? 10,000. That's how he has done that. Understood the point clearly or not? You can do in any way, but compare in a correct way. After depreciation number, you should not compare with the before depreciation number. Listening or not, everyone? Either you can do 45-35 comparison, or you do 30-40 comparison. But there is an addition of how much? 10,000 additions are there. Understood the point clearly? Do that, sir. Let's start doing. Sir, anyone want repetition? Anyone in the class needs a repetition? Shall I repeat one last time? One more time. Anyone in that set? Direct entry? How many are direct entry, please? Raise a hand. Direct entry batch. Frankly. Okay. You people understood the concept clearly? Clear? Shall I repeat? Shall I continue? Let's go into the next one. Calculation of additions made to the plant and machinery. Hey, write down. Up to here, understood whatever we have written? So the total fixed assets being plant and machinery after reorganization, means after providing for depreciation, it is 40. Yes, sir. Okay, everyone? So below right now. Plant and machinery before reorganization. Rupees 35,000. minus additional depreciation. Rupees? Tell me, additional depreciation how much? 5,000. Existing plant and machinery after additional depreciation. Rupees 30,000. Plant and machinery after additional depreciation and reorganization. How much? 40,000. Rupees 10,000. You can name it, this is A inside that, this is B. Two parts we have done. Done? So plant and machinery before reorganization minus additional depreciation. Existing plant and machinery after additional depreciation. Plant and machinery after additional depreciation and reorganization is 40,000. So additions made is 10,000. Clear? So don't compare 35 and 40 because 35 is before depreciation, 40,000 is after depreciation. You can't compare like that. Shall we move on to the next step? Sir, everyone in the class copied the notes up to here? Next. Step number 4. Yes? Not yet copied? Please, copy down first. Shall we go into the next step? Keep the heading. Step number 4. Calculation of value of stock. Value of stock. Calculation of value of stock. You tell me the answer now. First, will you listen? Tell me, what is the quick ratio given in the question here? Before or after? After. 1:1. Can you please tell me what is quick ratio formula? Current assets minus stock minus prepaid expenses whole divided by current liability. I will re-explain the ratio one more time. Listen. To pay the current liability, creditor is standing at my door. I have to pay him. Okay? To pay him, I require cash. I require stock. I will give stock. I will ask him sell that and get money. You can't tell. You can't even tell that wait till this stock is converted into cash. Therefore, we will tell them ideally I want current assets minus stock minus prepaid expenses. Means technically I require cash and debtors. I require what? In order to pay him. Are you understanding the point or not? So what is the problem here? Current assets minus stock minus PPE. In this PPE anyway not there in the question. There or not there? Do we know the current assets total value? Be in this world, everyone, 2 lakhs is the total assets. In that 60%, 80%, 60% is the fixed asset. Already we calculated. How much we got? 1,20,000. Balance is what? So 80,000 minus stock divided by current liability value we already know in the balance sheet. How much it is? Sorry, 50. 50,000 is equal to how much? 1. Understood or not? So 80,000 minus stock equal to how much? 50,000. So stock equal to 30,000. That's the answer. Everyone understood the point clearly here? Using what we calculated the value of stock? Quick ratio. Shall we do the current liabilities? Sorry, stock value. Let's start. First one point, understood the valuation, everyone? Using what we calculated stock value? Quick ratio, we calculated the stock. Right on there. It is given that quick ratio is 1:1. Which means to pay the current liabilities, company has exactly same amount of liquid assets being cash and debtors. If you write like this in exam and presentation, that's how it differs you from all other persons. That's what people makes as a rankers. How they present the answers in exam is very important. Everyone will do the answers. Everyone have same calculator. Everyone will learn from the same faculty. But one differs from all others means the presentation, how they present the answers, how they approach towards the question is different. So please do that properly. Tell me, what is the ratio we need to calculate? Quick ratio. Already given. Write down. Quick ratio given 1:1. Write down the formula for the quick ratio. Current assets minus stock divided by current liabilities equal to 1. Question la prepaid expenses not given, don't write unnecessarily. Next, what is the current assets? Rupees 80,000. Below write down calculated in step 3 if I am not wrong. Yes. Minus stock whole divided by what is the current liability? Rupees 50,000. Which step we have done current liability calculation? Step 1 or 2? 2 or 1? Yeah. 1. This will be equal to 1. Current asset step 2 or step 3? 2. So 80,000 minus stock whole divided by rupees So what is the missing figure we calculated, by the way? Stock. Sir, why stock will be useful? In what way the stock calculation will be useful for our question? First thing, using the stock, the velocity has been given in the question. If you can see there. Velocity. Stock velocity was given or not? What is the stock velocity that was given in the question? 2 months. Receivables to the sales. 4/5 receivable. Receivables means what? Debtors. Receivables means what? Debtors. Debtors will be generating sale, credit sale. Everyone. If debtors generate credit sale, all sales are credit sales. Yes, sir, last benches, are you with me? Yes, why all sales are credit sales? It is given in the question clearly that all the sales are credit sales only. There is no cash sale. Means the only way of sale in the company is only cash. That means if I can calculate the debtors, can I calculate the sale? Yes, answer. Yes, if I know the sale, I can calculate the gross profit. If I know the gross profit and sales, I can know the COGS. If I know the COGS, I will know the stock period and I can calculate every other balance. That means what is the hint here? What is the line we have to take? Debtors. Tell me now. Debtors gives you credit sale. Credit sale becomes total sale. From that you will calculate gross profit. Gross profit minus sale. Sale minus gross profit will give you cost of goods sold. Shall we do it together? But before doing that, first answer my question clearly. Roughly you tell me, receivables, 4/5 of the quick assets. What it is? 4/5 of the quick assets. First tell me, how much is the quick asset balance? How much? 50,000. What is 50,000? Quick assets. Quick assets means what? Current assets minus stock. So total if you remove, how much is the quick assets? 50,000 into 4/5. Calculate. Hey, what you are sitting at? Do that. Tell the value how much it is. What is 40,000? What is 40,000? This 40,000 will be the debtor. Quick assets of 40,000 debtors means 10,000 will be the cash. How much is the cash balance? 10,000 is the cash. Tell me what is the formula for quick assets? Quick ratio I am not asking. Quick assets I am asking. Tell me. Current assets minus stock. This is one way. Or you can also do as cash plus debtors. What is the cash? What is the debtors? 40,000. What is the balancing figure? Cash? 10,000. That's how we calculated the cash balance and debtors balance. Everyone understood the receivables now? Okay. With the help of receivables, what we can achieve? With the help of that, what we can calculate? Tell me the debtors velocity formula. 360 days we will do na? Tell that formula. Debtors divided by credit sales into 360. Generally days la 360. Here question it is given in months or days or months. Therefore we will multiply by 12. Tell the formula first. Debtors divided by credit sales. Okay, that means total credit sales, we will take the total debtors. How much time it is realized we wanted to know. Into 360 if it is given in days, into 12 if it is given in months. First, don't do. Roughly you tell me first, what is the debtors? What is the debtors? Divided by what? Sales. Which is sale? Normal credit sales we have to take, but in the question, credit sale is the total sale. Can I take it as a sale here? Yes. Tell me. Into 12. Tell me. So this will be equal to how much? 2. 40,000 into 12 divided by sales equal to 2. 40,000 into 12, 4, 48. 4 lakh. 80,000 equal to 2 into sales. Sales equal to how much? 2 lakh. This is the sales value. Sales value is how much, sir? 2 lakh 40,000. Did you understand what we have done or not? Yes, tell me, what is the formula for debtors velocity? I will not leave unless you give a proper answer here for my satisfaction. Tell me, what is the formula? Divided by credit sales into 360 or 12, as the case may be. Answer given in days, 360. Answer given in months, 12. So tell me, what is a debtor's balance? How you know debtor's balance is 40? From where you got that amount? He has given in the question that debtors equal to 4/5 of the quick assets. How much is the quick assets we calculated? Total current assets are 1 lakh. 1 lakh? 80,000. 80,000. In that minus stock. How much is the stock? If you deduct how much is the quick assets? 50,000. 50,000 into 4/5 became 40,000. What is 40,000? Debtor. So 40,000 is the debtor divided by sale into 12. This amount is equal to how many months? 2 months. Means I will realize my debtors. I will realize my debtors once in every 2 months. That means today if I sell, credit sale if I do today, money on that will come after how many days? 2 months after only I will get that. Using that I calculate. That means debtor gets converted into cash within how many months? 2 months is the time period. Understood the point or not, everyone? So tell me, how many months here? 2 months. So tell me the ratio now. How much is the sales value? Sales equal to 2,40,000. Shall we do it together in the notes now? Please keep the headings on. Very important adjustment in this question. Step number 5. Calculation of receivables. Brackets le debtors. Okay, write down. It is given that receivables are four-fifth of the quick assets. 4/5 of the quick assets. Next. It is calculated that quick assets equal to rupees how much? 50,000. Step number 4. Therefore, debtors is equal to rupees 50,000 into 4/5. Value please. Rupees 40,000. What is 40,000 here? Debtors or creditors? Debtors. So debtors comes to rupees 40,000. So calculation of receivables like debtors is 40,000. Using debtors, using the debtors and debtors velocity given in the question, we can calculate the value of the sales. Right now, step 6. Calculation of sales. It is given in the question that all sales are credit sales. All sales are credit sales All sales are credit sales. Debtors velocity gives the value of sales. Debtors velocity gives the value of sales. Okay. Right on. Debtors velocity has given us how many months, sir? 2 months. Debtors velocity means what? Can you please explain me the meaning of debtors velocity? How many months it is taking to convert the debtors into cash is called as debtors velocity. Next. What is the formula here? Please tell me. Debtors velocity formula. Debtors divided by credit sales into 12. Do you know what is the meaning of this formula? Out of the total credit sale, how much debtors is always stagnant? Means, sir, listening, yearly for example, I make 1000 rupees of credit sale. How much? 1000. 1000 will not be in the form of debtors always. We will realize, na? That means at any point of time, 2 months of my credit sale will be in the form of debtors. That's the meaning of the 2 months. Okay. This will be equal to how much? 2. What is the debtors value? Rupees 40,000 divided by sales equal to 2. Rupees 4,80,000 divided by sales equal to 2. Sales equal to 4,80,000 divided by 2. How much it is? 2,40,000. $2,40,000. What is 2,40,000? Sales. Sir, if you know the sales, what we can calculate after this? Yes. First, see the question and tell me. Gross profit was at the rate of how much percent of selling price? 15% of selling price. Can we calculate the sale? 15% of the sales and tell the gross profit. Write down the next step. Step number 7. Calculation of gross profit. Calculation of gross profit. It is given that gross profit is 15% of sales. 15% of sales. Gross profit equal to 15% into rupees 2,40,000. Please tell the value. 26? 36? 36,000. 36,000. Step 8. Calculation of cost of goods sold, also called as direct expenses and indirect expenses. All expenses of production, direct and indirect, we call it as cost of goods sold. That means up to the date you bring it for sale, we call it as a cost of goods sold. Tell the value here. What is the COGS value? Sales minus gross profit will be the cost of goods sold. Please tell me the values. What is the value of the sales? 2,40,000 minus GP is how much? 36,000. Total 2,04,000. 2,04,000. Give me one answer. Can you go back and fill the balance sheet? Tell the balance sheet figures now. Everyone, please don't sit idle. First one is what? Write down. Tell the values and write. Land and building, how much? Plant and machines or machinery. Sir, plant and machines or plant and machinery, net value, you tell me how much we got? 40,000. What is the cash? Separately we have to write kada. What is this stock? Hey, you calculated, yeah? Tell me, what is the debtors? Okay? Have you got the total 2 lakhs or not? Check that. 120, 130, 160 and 2 lakhs. Successfully we tallied the balance sheet. So balance sheet both sides, what is the total now? 2 lakhs. This is an indication that you have done right. If you have done anywhere wrong, now balance sheets will not tally. Okay? So we now filled the balance sheet. Recasted balance sheet over. Now everyone tell me, we calculated. 1 second, listen carefully. Shall we? Why return on net worth question is given in the return on net worth point is given in the question? Yeah, can you please explain me and educate me? To calculate the net profit. To calculate the net profit. Gross profit we calculated as how much? Answer. But what we don't know? Net profit we don't know. So what we have to do? Net profit will be calculated as a return on equity. If you remember, I told you very clearly. Listen everyone. Return on equity, what is the formula? Return divided by equity. What is the return? Equity shareholders will ask EBIT ya, EBT ya, EAT ya. So EAT by equity equal to 10%. Can I write like that or not? Now you tell, I will write. Roughly I will first do. Tell me what is the formula for return on net worth or return on equity? Return divided by equity. Tell me the elaboration of the formula. Derive the formula. What is the return? Equity shareholders will ask. EAT, the profit after tax, profit before tax, profit before interest and tax. Divided by equity means what? Equity share capital plus there is a sense surplus. As per the revised balance sheet, tell me this percentage is 10% they have given, okay, or 0.1, anything is okay. EAT we don't know, but what is the total of equity share capital plus reserves and surplus? 1 lakh equal to how much? 0.1. So EAT equal to 13,000. Means all other P&L expenses, can we calculate as a balance or not? Yes, that's all. We got the EAT as how much, sir? 13,000. Please keep the heading. Step number 9. Calculation of net profit. Okay, calculation of net profit. Do you along with me? It is given that return on net worth equal to 10%. Return on net worth is also known as, or is also called as, return on equity. Is also called as return on equity. Below write down. Return on equity equal to return by equity. What return equity shareholders will ask? EAT by equity. Equity should be written as equity share capital plus reserves and surplus. This is equal to 0.1. So EAT by, you told some value, rupees 1,30,000 equal to 0.1. EAT equal to rupees 13,000. EAT equal to rupees 13,000. Okay, everyone? So calculate. Completed? Okay. So the earnings after tax happens to be 13,000 in this particular given case. Sir, first tell me, to prepare the trading P&L and balance sheet, what all we require? To prepare trading P&L account, what all we require? To prepare trading, how many times I should ask the question here? To prepare a trading P&L account, what all we require? First you require the sales. Had we got the sales or not? Yes, next we need the cost of goods sold, purchases, etc. Had we know that amount or not? Yes, balance becomes what profit? Gross profit. From that gross profit we incurred some expenses. Correct? Those expenses we will write and we will calculate all these things. Okay? But before going into that, one very important point you should remember. Debenture interest is there. Debenture interest. Because debentures are not there in the before year. Debentures are coming now. Debentures will have principal and interest payment every year. Interest payment will be there. That interest is not there in the previous P&L but will be there in the current P&L. Correct? After deducting those expenses, it should be equal to 13,000 balance here. Correct? 1 minute time I will give you. See your answer and see the question and try it. Don't see my face. Don't sit idle in the class, please. 90% I have done. 10% I am asking you to observe. Try. Don't see the answers. Simple question I am asking you here. Nothing great in that. Do we know the gross profit? Yes, do we know the net profit? Yes, do we know the gross profit? Yes, how much? Do you know the net profit? Yes, what is the difference between gross and net? How much? 23,000. In that, how much is the depreciation? How much is the extra interest? 1,000 rupees. How much is the administration other expenses of the company? Oh, I know which world you are listening here. All I need to put on paper. See here. How much is the gross profit? 30? minus what is the net profit? Difference between gross profit and net profit is the administration other expenses, correct? How much? In this, how much is the interest expense? 1000. Means really the administration other expenses are 22,000. P&L will be completed with this. Okay, included already. In that cost of goods sold already that was included. Depreciation 5,000. You have 2 lakh 4,000 or something, na? That is direct expenses are there. In the depreciation already included. Okay, write down. Step number 10. Calculation of administration and selling expenses. No noise, please. Do it. When I ask, you will not speak. When I ask you to sit silent, you will talk. I'll reverse. Do it. Gross profit minus net profit will be other expenses. In that, interest expense if you remove, balance will be administration and selling expenses. Please give me the answer. How much is the gross profit? 36,000. How much is the net profit? So difference will be the other expenses. How much rupees? 23,000. In the 23,000, what is the interest expense? How much is the administration and other expenses rupees? 22,000. Lastly, write down. Copied up to here? Those who have completed, keep the heading recasted trading P&L. Recasted trading P&L. Recasted trading and P&L account. Okay. Write down, write down. Draw a T-shaped P&L. Write down. Particulars, debit rupees, particulars, credit rupees. Write down. First one, fill the numbers in the order in which you calculated in the ratios. First we calculated cost of goods sold. First we calculated gross profit. First we calculated sales. Everyone? On the sales we calculated gross profit. Using that we calculated COGS. In that way if you do, you will not miss any information. First write down. Sales. Tell the values. Sales 2,40,000. Tell me what is the gross profit? Then you calculated the cost of goods sold. Two lakh 4,000. Total them. Next. Tell how much is the gross profit we brought down? 36,000. In this 36,000, how much is the interest cost? How much is the administration and other overheads? How much at 20? How much is the net profit? With this, we calculated the complete problem number 2. Illustration 2 has been completed. This is how you have to solve point by point and try to get the answers done. One by one, if you do, mistakes will not happen. Listen, sir. See the answer now. Without seeing even a single answer, we have done everything now. Let us see. 2 lakhs. Check the answers. Fixed assets 1 lakh 20. Current assets 80, correct? Something worst he has done here. 120, 80, 40, 30, 10 like that. Sir, okay, no problem. Stock valuation I have done 30. Receivables 40. And today recording is there. By God's grace it is working. Sir, okay. See, oh, it's not working. Sir, anyway, use this, see the study material. See the answer there. Open the study material faster. So, what is the credit sale totally? Credit sales comes to how much? 2 lakh 40. On that 15% they applied 36,000. Correct? Next, net worth 1 lakh 30 they calculated 13,000 and 1,000 debenture interest. Lastly, they prepared P&L. They prepared the balance sheet. Answer is over. With this, they completed the entire calculations. Okay, na? But what is the observation you made from the question? What is observation you made from the question? 2 information given in the question are not even used in the question. Yeah. See there. Working capital ratio. Working capital ratio. Tell me, what is the formula for working capital ratio? Current assets by current liability. I will do here. Tell me, what is the current asset? 80,000. Current liability? That's what you want to tell. 8 by 5. Checking purposes. Yeah. 8 by 5. Next, stock turnover was 8 times. What is my stock turnover formula? COGS divided by average stock. Opening not given, na? Therefore it will be only stock. Correct? Correct? What is the opening stock? They have given in the question, if you see there. They have given in the question or not? You can, array, listen here. Stock turnover ratio, what is the formula? Stock turnover ratio, what is the formula? Cox divided by average stock or stock. Technically, you should take average stock if opening and closing are given. If opening closing is not available, what you should to take? Stock. If you do that, he is given 8 times. Okay. So this 8th information and the 3rd information what is given in the question are not so relevant in this particular question. That means even without that info, we can calculate the P&L and balance sheet and prepare them. With this, we completed answer to illustration number 2, which is a 8 marks question given once, 10 marks question given later. Okay. Like this, the questions will come. Sir, first point, everyone. From the ratios what we calculated the basic stage, the problems are coming on the same ratios or not. That's all. If you properly understand introduction to this chapter enough, problems you can do and solve. Next, come to illustration number 3. Sir, whenever I ask you to open one question, first close the answer because eyes will automatically fall. Don't see. Genuinely do that answer. Okay? Illustration number 3. Read. At least do one thing. See in the screen directly. Then no problem. See the screen. I will make it full screen if you want. Read the question. Don't sit idle in the class. Read. X company has made plans for the next year. It is estimated that company will employ total assets of 8 lakhs. Total assets he has given. When you read the question, half the ratios you should get in mind. Total assets are 8 lakhs. 50% of the assets are financed by the borrowed capital, means a debt. Sir, tell me, total assets of a company is funded by what and what? Debt and equity. Total assets is the capital employed. Total assets is the capital employed. In that capital employed, how much is the borrowed capital employed? 50%. At what cost? 8% per annum. Direct costs for the year are estimated at 4,80,000. And all other operating expenses are estimated at 80,000. The goods will be sold to the customer at 150% of the direct costs. Tax rate is assumed at 50. You are required to calculate operating profit margin before tax, net profit margin after tax, return on assets. Return on assets is also called as what? Return on capital employed. Return on. You will purchase assets out of borrowed funds or robbed funds. Borrowed funds are own funds. So total funding is the total assets of a company. Okay. Next. Return on assets on operating profit after tax, asset turnover, return on equity. These are all the 5 ratios. 10 marks given in one of the recent 2022 May or November. 10 marks question. Read the question properly. First tell me how many he asked us. How many bits he asked us to calculate? 5. 5 twos 10 marks. Understood the point clearly? 5 twos 10 marks question. Read the question. Close your study materials first. Answers you will definitely see. It may not be intentionally, but unintentionally you will see. Try. Try it. Don't ask me any questions. What is this? What is that? Everything is already taught. Five minutes time. Slowly you start doing. Right or wrong, put the pen on paper, try first. If you see like that, nothing you will get in FM. How to put the pen on paper. Then you will understand at least 60% you have done right. Don't say the answers. Close the study materials. Close all the study materials, everyone. Try for the answer. And again I am telling you, this is one of the easiest questions given in exam. Apply this properly. 2 minutes you will do. Seriously I am telling. One hint is given. Observe that hint properly. I will tell the hint also. I can't stop. You will do a? Try. Try doing it. No problem. Try it. I will wait. 5 minutes time I said. Na? Can you please tell me what do you mean by operating profit? I told you so many times in introduction. Operating profit means what? Adi. That's all. If you know that, you can answer. Hint number 1 given. Do that everyone. Done. How much is answer? Do on paper. Bro, have you done? Hey. Huh? Don't ask me questions. Anyone have done here? First, sir, okay. See here, I don't know whether you have done right, wrong, etc. But to be very frank, this is a easy question here. If you observe properly, the hint is he has given saying that sale is 150% of direct cost. Means direct cost is already given at how much? 4,80,000. Means from that can we calculate sales or not? Shall we do it together now? Write down. Question number, illustration number 3. What is the page number here? Page number 3 point. First write down. Hey, write down, sir. Step 1. Calculation of sales. Calculation of sales. Calculation of sales. Write down. It is given that sales is 150% of direct costs. And direct costs are rupees 4,40,000. How much? 4,80,000. 4,80,000. Sales equal to 4,80,000 into 150%. Value please. 7,20,000. Step 2. Income statement. Income statement. Properly write down the income statement. Particulars. Amount rupees. Particulars amount rupees. What we are doing in this? Which statement? Income statement. Income statement means P&L in a different way. We will generally take gross profit, all these things. Here all those will not be there. Sales minus cost, EBIT, like that we will do. This is called as what? Income statement. P&L in a different way. Okay. Write down. First, sales. Step 1. Tell the value here, sales. 7,20,000. And they have only given in the question that direct costs given. How much is the direct cost? 4,29,80, 80. 4,80. So this amount, whatever you got, sales minus all the direct costs. Sales minus all the direct. Here in the question, fixed cost, variable cost separately given or not separately given. Therefore, there is no concept of contribution, etc. Directly say that we will go into EBIT. In the brackets, write down operating profit. How much? Balance. Expenses given. I'm very sorry. I'm very sorry. Very sorry. Please tell me what is the operating expenses given? Okay. Operating expenses. How much is given? Tell me. What is the EBIT? Also called as what profit? Operating profit. Tell me what is operating profit value? 1 lakh? 1,60,000. Copy down up to here. Okay. So this is EBT, EBIT. From this, what we need to reduce? Interest. In the question, interest is given or not given? Given. Interest percentage they have given, if you see. How much? 8%. So tell me, 1 second. In the total capital, borrowed capital will be how much percent? 50%. Okay. Now tell me, How to calculate the total capital here? How anyone will know the total capital? Total assets will be the total capital, correct? In the previous question also we have done that or not? Total assets will be total capital. What is the capital then? 8 lakhs into what is the percentage? 50%. How much it will be? 4 lakh. 4 lakh into 8%. How much it will be? 32,000. That will be the cost of interest. Listening everyone? Right now. Interest cost. Below as a working note type you write down. Rupees 8 lakhs into 50% into what is the rate of tax? Rate of interest 8. Do you understand what is 50%? Everyone observe carefully. What is 50% there? First one, listen. What is 8 lakhs? In a balance sheet, assets and liability total should tally or not? What is the total of assets given in the question? Therefore, liability is also how much? So, liability entirely financed by both debt as well as equity. How much is the equity portion? 50. How much is the debt portion? 50. 50% of 8 lakhs is how much? 4 lakh. In this 4 lakhs, P&L there will be interest or not? How much it will be? 4 lakh into 8%. How this 4 lakh came? 8 lakhs into 50%. Did you understand what we have done? Tell me the value. $32,000, huh? Tell me the value. This is called as earnings before tax. How much? 20? Those who have to copy, please copy up to here. One lakh 28,000. Tax given or not given in the question? Given. How much is the tax rate? Tax at the rate of 50%. We need not do business if really this is a tax rate. Then we are doing business for government. So, tell me how much is the tax rate? Tax amount?
64,000.
Tell me. What is the earnings after tax? 64,000. That's all. This is the step number 2. What step we calculated now? Income statement. What statement, sir? Income statement. Stop here once. I have one question to ask. After that, we will do the last step. Step 3 is the last step here. Calculation of various ratios. How many ratios we have to calculate? 5 ratios we have to calculate. Very easy to calculate, but still, answer my question. Take the question once. Using calculator, you tell me the answers. No need to even put pen on paper. Start. See there. What is the first one? Operating profit margin. Listen. What is the margin?
Operating profit margin.
If you remember, originally we have written 6 types of ratios. 6 types of ratios we have written, correct? Please come to that place once. Come to sales profitability ratios. Come to sales profitability ratios. Okay, profitability. Profitability means sales profitability. Okay. See there and tell. Do we write operating profit ratio in that or not? Third one, fourth one. 1, 2, 3. Third one. What is that? Operating profit ratio. Tell me what is the problem of operating profit ratio? EBIT by sales. EBIT by sales. Who influences whom? Sales influences EBIT. EBIT influences sales. Take calculator. EBIT is how much? Divided by sales is how much? Tell the ratio. 22.22%. 22.22%. Roughly you write down there. 22.22%. Somewhere roughly write down. Actually, we'll check the answers. 22.22%. What is the formula we calculated now? EBIT by sales. What is the second ratio he asked in the question? Net profit margin. Everyone tell me, can you do low? Listen everyone. Can you calculate net profit ratio like that or not? Net profit ratio, what is the formula? EAT by sales. You have done that in your notes or not? I made you write the ratio. EAT by sales. Tell me what is the EAT? Divided by into 100. 8.89%. Write down that also somewhere. 22.22 is the first answer. Next one is 8.89. Okay. Next. Question number 3. What is that? Return on asset. Very important. This is the only thing I have to tell. See there. He is asking very clearly. Return on assets means we can write return by total assets. Return by. But clearly he is asking after tax calculations you take. Very easy. No, wrong. Listen carefully. Tell me, money belonging to the equity is EAT. Money belonging to equity is EAT. Money belonging to debt is answer, yeah. Money belonging to both is EBIT. Because EBIT is a source for the payment of debt as well as the equity. Therefore, if you have EBIT, it is a money belonging to how many? Debt, equity, both. 3 people. Government is also involved in the middle. Correct? He is asking, remove the government and tell. Remove the tax and tell, then tell the balance he is asking in the question. Are you understanding the point or not? Tell me, EBIT belong to how many?
3.
How many?
3.
Who are they?
Debt,
Debt,
government,
government, equity. In that whom he don't want to take here?
government.
Answer.
Government.
Remove them. Means EBIT into 1 minus T. EBIT into?
1 minus T.
EBIT into?
1 minus T.
When I make 1 minus T, what I will get? Operating profit after tax. What I will get? Operating profit after tax. Generally, what is the formula for? What is the formula for return on assets? What is the formula for return on capital employed? Very bad. Start from the beginning again. Tell me. The total capital of a company will be used to buy the assets, correct? Current assets, fixed assets. All the amounts put together will be financed by 2 modes of finance. Number 1, debt. Number 2, equity. Or number 1, equity. Number 2 will be debt. Listen carefully. In this question, how much portion of total assets are financed by equity? 50%. How much is financed by debt? 50%. Both put together, how much financing they are giving? 8 lakhs. Listening? 8 lakhs is the amount we invested in the assets, no doubt. Listening? Those assets generate the operating profit, correct? What do you mean by operating profit? EBT, EAT, EBIT. EBIT belongs to how many people? First we will reduce what? Interest. Next we will reduce what? Tax. Next we will reduce what? Dividend. Or balance is available to equity.
Yes, sir.
Means EBIT is a source for 3 people. Number 1, debt. What happened? Power issue. Shall I stop the class? 12:30? I should stop the class. Sorry. Okay. What is the time now? 12? Okay. Sir, okay, listen carefully now. Answer to my question. Shall we? My watch was switched off. Just now I saw. Battery over. Sir, okay, listen carefully. Point is, the total funding is given by 2 people. Number 1, debt. Number 2, equity. From that, I will do the business. I made sales. I incurred costs. I got EBIT. I got now tell me. EBIT belongs to how many people? Number 1 will be debt. Interest will deduct. Next, tax. Government will take. Balance will be available to equity. In reality, return on assets formula is written by total assets. Written by total assets, you use generated sales. Generation of sales is made by debt capital, equity capital, both capital. Likewise, sale is made by fixed asset, current assets, both assets. Actually, a formula is total assets, return on total assets means EBIT divided by total assets. EBIT divided by total assets, because unless and until I use the total assets capacity, I can't pay taxes to the government as well. Originally the formula is what? Return on total assets means return by total assets. Return means what return? EBIT by total assets is the formula. Listening or not? Clearly he is asking in the question here, operating profit after tax. Net profit after tax, operating profit after tax, operating profit after tax. That means first what is amount in hand? EBIT. From that who will take tax? Balance is available to debt and equity. That's what the return on assets he is asking us to calculate in the question. Understood the point or not now? Tell me, what is EBIT? In the question, number 1,60,000 into 50% means 1 minus 0.5. How much it is? 80,000 divided by what is the total assets? 8 lakhs. What is the percentage? 10%. That's the answer for return on assets formula. Everyone understood the point clearly? Yeah? Answer here, everyone. How much is the answer you got? What is the total numerator? Numerator is how much? How you got 80,000? Because all are telling. What is the one second? What is the total EBIT? That is before tax or after tax? Before tax or after tax? And that how much is the tax part? 50%. 1,60,000 50%. So what is the EBIT after tax? 80,000 divided by what is the total assets? 8 lakhs. 80,000 by 8 lakhs into 100 is 10%. That's the answer for the third bit. Everyone understood the concept clearly? Fourth bit. Asset turnover. We have calculated that formula also or not? 1 second. Turnover generate assets, assets generate turnover, sir. What is the total assets? What is the total assets? Assets 8 lakh. What is the sale? Total formula is what? Turnover by total assets. Turnover by total assets. What is the turnover? Turnover 7,20,000 divided by 8 lakhs. How much it is? 0.9. 0.9. If you take it as 0.9, how to understand? For every 1 rupee of the asset, you generated a sale of 0.9. 0.9 times, technically to understand. Or rupees like you tell 1 rupee asset ki 0.9 sales generated. Listening everyone, that means we are not utilizing even at par, we are using below par. That means assets are not properly utilized in the company. 1 rupee asset didn't even generate 1 rupee sales. 1 rupee asset, you generated how much sales? 0.9. But do you know what is the problem in this? If it continues like this in long run, assets are purchased out of borrowed funds also. You are not using them properly. Interest costs will automatically increase in the company. It will become a burden for the company. Sorry, all those analysis we will do in next problems. Up to here, everyone understood the point clearly? What we calculated? Return on, asset turnover. Now, without seeing the formula, could you able to answer all the formulas or not? Logic K important for ratios chapter. Tell me, asset turnover ratio, what is the formula? Who influences whom? Asset influences turnover. Therefore, turnover should be on? Asset should be on? Therefore, what is the turnover in the question? 7,20,000 divided by what is the assets? What is the answer? Point. Last one. Return on owner's equity. Tell me. In this question, what is the owner's capital?
4 lakhs.
Answer.
4 lakhs.
That's the owner's equity of 4 lakh. Return generated for the owners is EBIT, EBT, EAT. EAT by equity. Can we calculate or not? What is the equity? 4 lakhs. What is the EAT?
64,000.
64,000 divided by 4 lakh into 100. How much?
160.
Tell me all the 5 answers one by one. 22.22%, 89%, 10%, 0.9 is to 1, or you can also write it as 90%. Next, 16%. 22, 8.9, 10, 0.9, 16. That's all. This is the answer. Everyone understood the answers clearly? Let's copy down and then leave for today. Next question I can't even begin, even if they give time up to 1 o'clock. It takes time. Next one is again calculations part. Step 3. Calculation of ratios. Hey, write down here. Complete and leave. First, ratio type number 1. What is the first type? Operating profit margin. What is the formula for operating profit margin? Write down clearly. EBIT divided by sales into 100. All the amounts we already calculated. EBIT 1,60,000 divided by 7,20,000 into 100. 22.22%. Operating profit margin, EBIT by sales into 100, 1,60,000 divided by 7,20,000 into 100, 22.22%. Second, what is the second one he asked? Net profit margin. Tell the formula for the net profit margin. EAT divided by sales. That equal to EAT is how much? Tell the percentage. 8 point. Third one. Return on assets. Return on assets. Return on assets. Sir, when you calculate the return on assets, we should take operating profit after tax. This is a specification given in the question. So, write down the formula. EBIT into 1 minus T whole divided by into 100. What is EBIT? 1 lakh 60,000. Tax rate is how much? 50%. Whole divided by rupees 80,000 how much percent? 10%. Next, number 4. What is the next one? Asset turnover ratio. Immediately, whenever they are asking turnover ratio, who influences is important. Asset will influence the sales will influence assets. Assets will influence the sales. So immediately formula should be turnover by total assets. Rupees 7,20,000 divided by as a ratio. You tell me the answer, not as a percentage. 0.90:1. Return you should express in the percentages. These you can express in times or in ratio. Over. What is the last one? Return on equity. Owner's equity or equity, both are same. Owners require, equity owners require EBIT, EBT, EAT. Equity. What is the EAT given in the question? Rupees 1,000 divided by why 4 lakh only? We are taking only equity shareholding percentage, not debt, not capital employed. This will be in percentage again. Percentage 16%. With this, we have completed which question? Illustration number 3. So there are 6 big illustrations given in the study material. Totally how many? 6 big illustrations are there. If you do all the, sir, first point tell me, once you do problem number 1, problem 2 became easy. Problem 2 and 1 is done. 3 becomes easy. Like that, once you practice 6-7 questions now, all questions in exam looks alike. Listening, but we are not going to stop like this. 6 illustrations, 12 main illustrations, total around 18 to 20 problems we will do in this chapter. If you do those 18 to 20, any question in exam you will solve. Listening, we will do every problem in the class. Not even a single problem will be given as a homework. You can ask your previous batch students as well. One question also we will not give the homework. If 100 questions are there, 100 we will do in the class. Clear? Sir, anyway, everyone in the class understood the concept clearly? Yes, sir. Have you all understood? Yes, sir. So thank you very much. Next session we will continue and do the remaining problems.